Hello guys, this is Vinit from Edge-Forex and today is the 21st of May 2025 and I wanted to talk today about Japanese yen and what's happening around that currency, especially against USD, against US dollar. So if you're in the Forex market and you are following any major pairs, I'm sure you know USD JPY is one of the majors, and it's been going bananas, going absolutely nuts. It's moved 500 pips in less than 5 trading days, and that is unprecedented uh, for this pair. It has moved, but not at this pace. And I wanted to talk a bit about look a little deeper into why that is happening. Okay, guys. So you're looking at the chart. It's an hourly chart. It's going back about 5 trading days. So you can see the move from all the way from 148.50 down to 143.50. That's a huge move. So that's 100 pips a day, 5 days in a row. That's big. That's really, really big. So let's see what's going on. Now, why is this important? Because Japan, after China, is a major, second biggest trading partner for the US in Asia. So China obviously is number one, and Japan is number two. And we know there are a lot of issues that are happening between USA and China. So let's mark that down here. So US, China, trade deal not going good. Okay, so that's reason number one. So US-China trade deal is not going good at all. They're loggerheads heads, and now US is saying that there's absolutely no way that US or they're going to stop Eurozone from using Huawei-based AI chips. So that is, again, it's something really, really big that China is not happy about. So what that is happening is one person's loss is another man's gain. So what's China losing, and all the peripheries are benefiting from that. So Japan is getting a lot of attention, is getting a lot of fallout from the losses that are being made by China and in the US deal. And then the next reason is monetary policy. Okay, what happens? See, for the longest time, Japan was running near zero rates, and now, because of inflation, because of the currency was so weak for such a long time, because not too long ago, Japanese yen USD JPY was hitting like 160, and that's really, really bad. And now it's come down almost 10% from that level, and that is happening because Japanese banks or their central bank BOJ is actually in a rate hiking cycle. So earlier there used to be a carry trade because of lower rates in Japan. People used to, or countries or companies used to borrow in Japanese yen and then buy currencies with high yields like US dollar. So there used to be an interest rate differential of, say, 4, sometimes even 5%. So, and Japanese currency was very stable for the longest time. It was only last year to year and a half that it's not been stable. So that's another reason. So now Japan is actually in process of raising their rates. So let me mark that down. Okay. So that's, oops. Hey, what's going on? Text. Okay. Rate high. Okay, so Japan is raising rates, and US, on the other hand, is lowering rates. So that is what's happening now. So that is making US less and less attractive compared to Japan. Remember, guys, I keep telling you that money flows where it's treated best. Right now it's treated best in the US dollar. But for how long, I don't know that. But if more and more countries like Japan, they are raising rates, money will start flowing into Japanese yen, and then um, flowing out of US dollar and euros and whatnot. Even euro right now is in rate lowering cycle, not rate hiking cycle. So that's another thing. And Japan has been a very good partner of the US for the since World War II. And because of the, as I said, because of the fallout from China, they are going to benefit a lot from the trade deal with the U.S. So that's what the expectation is. So let's look at the flip side now. Why U.S. dollar is because right now we were talking about Japanese yen. So we are looking at the chart of USD JPY. So every currency they trade in pairs. So EU or USD. So if we are analyzing euro, we also need to look at the other side of the trade, other side of the pair, which is USD. So here we are analyzing USD JPY. We need to also look at USD. So now let's get rid of this stuff here. Okay. So the biggest reason why there's been weakness in the US dollar recently is the Moody's, which is the rating agency, they downgraded the US dollar debt. In other words, they're saying that US is borrowing very aggressively, and they think the quality of their debt or is not as good as it used to be. So their uh, ability to pay is not as strong as it was, say, a few months ago. So they see some kind of risk in U.S. debt. Now, U.S. is never going to default because they are the world's reserve currency and they can print as and when they want. So they can also always print and repay their debt. But what happens is more you print, the more money or more your dollar is going to lose its value. So the debt is repaid in depreciated dollars. So that's why there is this Moody's downgrade to the US debt. And that's what's happening is pushing up all the currencies that are actually paired with US dollar. So for example, Euro USD is going higher. GBP USD, British Pound USD is going higher. So all these countries, Australian dollar is getting stronger. Canadian dollar is getting stronger. So there is a universal weakness that is actually happening in the USD as we speak. Will it last long? I don't think so. I think it's a temporary move. And once this plays out, all the negative news plays out, then I'm expecting a reversal and it's going to be a very, very strong one. So now, first is the, okay, so Moody's downgrade. And the other is obviously trade wars. Because what's happening now is there are a lot of companies earlier that made a lot of shipments to the US, and those shipments were standing on US shores for weeks at a time. So what that did, that stopped the commerce. So if the shipments are not making to the buyer is not going to release the payment, and then hence there is no flow or demand for USD. So there is a very short lull in the demand for US dollar because of all the trade disruptions. Remember, guys, US is the biggest buyer in the world. US is the reserve currency. So if they're not buying anything, that means they're not spending any USD. If there is no spending in USD, there is no US demand for USD. So let's put the next one as demand flow due to trade wars. Okay. That's another reason US dollar is weakening in the marketplace. And then there is, tariff wars, trade wars. safe haven, going into instead of US dollar. US dollar used to be the safe haven, but now all of a sudden it's a Japanese yen, a Swiss franc. Why? Because US is the one initiating these trade wars. So now especially with Trump, nobody trusts what this guy's going to do next. So they don't know what to expect out of US coming next day. Tomorrow he'll come saying, hey, there's a tariff on everybody for 40%. Nobody wants uncertainty in the marketplace. And right now, all the uncertainty is around US dollar till these trade deals are settled. And will that happen today, tomorrow, next week, next month? Who knows? Because we are dealing with a person who's running the show who is very, very unpredictable and unreasonable to a certain extent. So that's what I thought. I thought I'd let you guys know what's going on in USD JPY marketplace. And I am not expecting this to reverse. I'm expecting US dollar to reverse. I'm also expecting Japanese yen to keep strengthening. So that's another conundrum. Is going to wreak havoc around the world if both US dollar and Japanese yen strengthen at the same time. And that's what I'm expecting to happen next. And that's for another video that will come out and discuss that what are the ramifications and what's going to happen next on that. So that's it. That's it for now. And if anything changes or develops, I'll come out with another one. All right, till next time.